Hey, good morning, everybody. Today is Monday, March 16th, 2015. My name is Cliff Backus, and I am the Chief Market Strategist for Push Button Stock Trading. This is your daily video market review. Stocks fell but trimmed losses in the final hour Friday. For the week, the S&P 500 was down 0.9%. The NASDAQ was down 1.1%. What we're looking at here is the Russell 2000. We're looking at a weekly chart of the Russell 2000, and we're looking at the longest bull market in history. This bull market started on March 10th, 2009, and continues today. What I want to do is zoom in a little bit on the Russell 2000, because the Russell 2000 at this point is important. Now what we're looking at is a daily markup of the Russell 2000, and you see that back in March of 2014 we put in a high. We retested that high and failed. We retested that high, failed again, and then in February of this year, we finally broke through that 1213 area and went on to make a new high. The reason that's important is because since that time, the Russell 2000 has outperformed every other index that we follow, indicating that the smaller stocks in this market are starting to do better than the larger stocks. That typically is a situation that creates the best opportunities on a short-term basis in the market, but also when the small cap stocks outperform the large cap stocks, it also may be indicating that we're approaching a top to the bull market. Typically, when the markets get frothy toward the top of the market, smaller stocks outperform larger ones. Let's take a quick look at the NASDAQ Composite. NASDAQ Composite on Friday was down 21.53 points, or 0.44%. We are down in the area where we're testing support in the 4811 range. I do expect that maybe we undercut that level based on how the market has acted in the past, that we undercut that level before we go on to make new highs. Trading volume on Friday was just a shade below the prior day. The NASDAQ Composite has been in a confirmed uptrend since January 8th. We have 4 distribution days in the past 2 weeks in the NASDAQ Composite. Right now we are bracketed by support in the 4811 area and resistance in the 5009 range. We are on our 1 to 6 month timing model indicating a market in transition. Short-term traders want to be cautious here. We don't want to begin selling, but we also want to be very selective about what we buy. Let's take a look at the S&P 500. S&P 500 on Friday was down 12.55 points, or 0.61%. The S&P traded higher volume on Friday than it did on Thursday, which gives us another distribution day. In the past 2 weeks, we have 5 distribution days. That's a lot of distribution. That said, we're still in a confirmed uptrend, although the market is under pressure. We've been in a confirmed uptrend on the S&P 500 since January 8th. Our 1 to 6 month timing model has gone to a don't buy signal. What that means is that we don't want to be adding to positions at this point, and we want to tighten up stops on our existing positions. Right now, the S&P 500 is bracketed by support down here in the 1992 area and resistance up here in the 2094 area. Taking a quick look at our MACD histogram. The histogram is trading below the zero line, which is bearish, but we've developed a little bit of an uptrend here, which is bullish. And so because we have a bearish signal and a bullish signal, right now our immediate bias on the S&P 500 is neutral. Before we go, I want to talk about a few stocks that we've been watching and that we may want to keep an eye on this week. First stock is an old friend that we've been watching for a while, Gilead Sciences. Gilead Sciences develops therapeutics to treat viral, fungal, respiratory, and cardiovascular diseases. We've been following this one for a while. We've been watching this trend line right here. A break above that trend line would be a buy signal, especially if it came on heavier volume. If you notice, trading volume in Gilead has dried up as we've developed that trend line. We want to see the stock break above the trend line on heavy volume. Aggressive traders can buy it there. More conservative traders may want to wait for a break of this 105.42 area. Next, we have a new stock to our watch list. Sherwin-Williams operates 4,000 paint and coating stores in the U.S. and the Caribbean and plans to expand its base by about 3% each year. Sherwin-Williams gets a 64% rating on our checklist and has not outstanding growth estimates over the next year or so. However, it's putting in a nice 3 weeks tight base here, pulling back and testing this 50-day moving average for the first time since the stock has broken out of its base back in this area back here. What I would look for is a break above the 291.27 area on at least 140% of average daily volume. A 3 weeks tight pattern is generally an add-on base pattern. What that means is that we don't generally want to initiate a position on a 3 weeks tight. We want to add to existing holdings if we already hold Sherwin-Williams. However, because this has come back and it's tested the 50-day moving average for the first time, a little bit more aggressive traders may want to take a position in Sherwin-Williams when it does break out of this 3 weeks tight pattern. Next stock we've been following for a while also. However, it's set up a different type of base now. This is Facebook. We've been watching Facebook for a breakout from a flat base. But it seems to be setting up a cup and handle right now, and a very nice cup and handle at that. You can see that we've put in this cup, and we've put in at least a week on the handle. Notice how volume has dried up in the handle. Our buy point on Facebook would be 81.99. Facebook also gets 64% on our checklist. Facebook provides a social networking platform enabling members to stay connected with friends and family via Facebook.com. Everybody knows what Facebook does. The next stock I want to take a look at is Old Dominion Freight Lines. Old Dominion provides less than truckload, interregional, and national motor carrier services throughout the United States. It also gets 64% on our checklist. It's setting up a very nice cup and handle base here as well. I've been watching Old Dominion Freight Lines for a while. I particularly like the stock. It's in a good position to take advantage of lower fuel costs, and our buy point on Old Dominion would be 79.46. I would want to see volume pick up as we break through that buy point. I would want to see at least 140% of average daily volume. Notice how in the handle the volume has dried up here. That's exactly what we want to see in the handle of a cup and handle base. Next stock is LinkedIn. We've been watching LinkedIn for a 3 weeks tight pattern. LinkedIn has now put in 5 weeks, which makes it a flat base. We've been watching it as an add-on buy point for existing holders. However, now as a flat base, new holders can purchase the stock when it breaks above this 276.18 level. LinkedIn provides a social networking platform enabling members to share their professional identity online via LinkedIn.com. LinkedIn gets a checklist rating of 72%, and I really like the stock. Notice how volume has dried up here. We want to see it break above 276.18 on at least 140% of average daily volume. Next stock is Jazz Pharmaceutical. Jazz develops specialty drugs in the therapeutic areas of narcolepsy, oncology, pain, psychiatry, and other areas. Jazz also gets a 76% checklist rating. Jazz is in a second stage base right now, and there's two potential buy points for Jazz. Aggressive traders want to buy it as it breaks above this trend line. More conservative traders will want to buy it as it breaks above this consolidation area. We want to see it break above the trend line on 140% of average daily volume. Conservative traders want to see it break above 183.84 on heavy volume. The last stock I want to take a look at today is Palo Alto Networks. Palo Alto provides network security infrastructure products for enterprise service providers and government entities. Palo Alto gets a checklist rating of 80%. There really isn't a base setting up in Palo Alto here, but I like the way that it's pulled back and is trying to test its 50-day moving average. I also, if you take a look at Palo Alto's history, it puts in a nice short flat base and then breaks out, moves up to the next level, puts in a nice flat base, breaks to the next level, flat base, breaks to the next level, flat base, breaks to the next level, flat base. And now we seem to be doing the same thing right here. I would buy Palo Alto at one of two areas. If the stock pulls back to its 50-day moving average, I would buy it there. If it breaks above this prior high, which is 149.35, I would buy it there. That's about all I have for today. If you want to talk about the markets or any of our trading strategies, please feel free to give me a call, drop me an email, or if you'd prefer, make an appointment. Come by the office, see what we're up to. If you're out of the area, we can set up a Skype session. See my contact information on the homepage. If you've not already done so, please take a minute to subscribe to Push Button Stock Trading. You can also follow us on Twitter at Push Button Stock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push-Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.